Good day, broker partners. Loren here once again from 3 Point Capital. Hey, I am absolutely thrilled to interview Matt Imhoff. He's the owner, founder of Meticulous Mortgages down the Lower Mainland. Matt and I met by a mutual broker a couple weeks ago at the BC Lenders Group event that held down in Vancouver, and got to know Matt a little bit during the conversation, and found out that he has got a great new company he's launching quite soon. And I thought it was just a great time to bring him on, let our broker partners know out there across the country what he's all about, and basically how he can possibly help your business. So welcome, Matt. Pleasure
Thank you.
to
Thank,
meet you.
thank you for having me, and thank you for attending our training earlier this morning.
That was awesome. Yeah. So folks out there, I did sit in on Matt's presentation today, his training, and we'll get touch a little bit about that later on in the interview. But it is outstanding. I think anybody that's in this space, whether you're new or experienced, you could benefit from the mentorship that Matt and the team has there. So let's kind of jump in it. As I mentioned, you first and foremost have been a broker. You own Meticulous Mortgages out of Lower Mainland. So how did you get into the biz, and how long have you kind of been in the game?
So I've been a broker for 9 years. It's crazy. Just feels like time flies by. I've always been like a numbers, like fine analytical, try to figure out the best way of doing things. And so I previously I spent a lot of time with the Royal Canadian Navy with the Naval Reserves, and so
Nice.
I remember doing my course while sailing on deployment off the coast of Guatemala, and I wanted to do something. We were starting to think about having a family, and I wanted to do something where you just not away sailing all the time. There's a lot of guys you see away from their families if there's an opportunity to pivot. So I took my course, became a broker, overwhelmed by everything that's out there, but then also realized when we kind of look at penalties, it's something we have to deal with, but we really don't talk about it all that much. Like it's like you're wearing a really nice shirt. If I'm selling shirts, I don't need you to return that shirt to buy one from me, right?
Right.
But if we're dealing with mortgages, typically someone has to return a mortgage, whether it's midterm or at maturity, in order to get a mortgage from us. So you would think we'd be highly invested in understanding the return policies of the person that sold you that mortgage or that shirt, on top of the sale and the product knowledge of the products and solutions we're presenting to you.
Right. Yeah.
So
So
it's and that's where even stuff too. I look at it. Lenders would say stuff like, "Oh, we can only quote a penalty for today." And I remember thinking, I'm like, well, if we live in a simulation, because there's the theory that we live in a simulation, well, there's a formula for everything.
yeah.
And the formula for everything is a lot less complicated than the formula for what they're going to charge us if we return a specific mortgage amount on a specific date based on the factors that are in play. And then I thought about it and I was like, we do get penalty quotes for the future. They're called payout statements.
You're
We
right.
just have to make some assumptions between now when we got it and when we return the mortgage. And so what it led me to do is I was like, I created my own calculator that mapped out the entire term
Yeah.
so that I could see how these factors, whether it's a posted rate of contract, an amortization, a mortgage balance, a remaining term, where rates are at, and I could see, well, where's that IRD relative to 3 months interest? And then I could also map out what has to happen
Right.
for that penalty to hit, slightly above 3 months interest, for it to hit 5,000, 10,000. And then based on how each lender does things, I could determine the likelihood of that happening and then assess the products better for the clients.
And so I guess during that whole sort of epiphany moment, you said, "Hey, not only am my clients benefiting, and those of my team members at the brokerage, how could I create something that assists other brokers and agents across the country?" And I'm
Oh,
guessing
absolutely.
that's
Absolutely.
how
And
Prepayment
yeah,
Penalty Mentor dream came reality, right?
Well, the thing here is I've, previously I put together like a course, and then I kind of just realized I'm like, a course doesn't really make sense. Obviously, people want a tool that just does everything because then you don't have to learn what's going on, right? I mean, we don't need to learn a lot about cars and motors to drive a car,
Right.
but I'm certain if you bought a car 30 years ago, you had to know more about cars than you do today, right?
Right.
So obviously, when it comes down to it, because each lender does things a little bit differently, and there's, and a lot of the information is kind of closely guarded, we couldn't get to a tool that does everything right away. We had to just focus on where we could deliver value. So I look at it, it's like I'll tell brokers where to dig,
Yeah.
right? But eventually we'll have it where it's like, here's a metal detector that's going to help you find that goal, right?
Yeah.
But if I say in this general area, these mortgages here, there's value, okay?
Yeah.
And then I go and say, over here, there's cliffs, there's dangers, there's sharks. That might be the mortgage where the penalty is going to rise faster than it should. And just let people know, like if you're selling a product, how to describe it better, right? And really that's what we're trying to go and do. So the nice thing is like, so with the training, so we launched about a year ago. We had
Okay.
like 10 brokers, just people that are willing to want to talk about penalties. Rates were going up. The fact a broker wants to learn about penalties
Yeah.
when rates are going up. And when rates go up, you tend to just have 3-month interest penalties, and then realize just preparing for the opportunities once bonds started coming down that these IRDs are going to return, and a lot of them were hibernating under higher rates, and just preparing and just realizing that there's situations where if the penalty is less than it should be,
Right.
then you should return the mortgage. If
Yeah.
the penalty is what it should be, you need to have some other external value. If it's more than it should be, then you are trying to finish the term. You're porting the mortgage. And really, that's when we look at penalties, they just exist in those categories, but they can roam a little bit or a
Yeah.
lot if it's a bank and posted rates. And just knowing where you're at so you can show value to your clients, but also identify risk.
Yeah. During your session just a little bit ago this morning there, one thing I notice is for those out there, this isn't, and like Matt mentioned, isn't sort of a plug and play where you kind of go and look at a desktop and it gives you all of the answers. There are some answers there, but you actually have to know what you're looking at, and you have to sort of understand the penalty game in the industry. So you do have to do some homework and some research and understand what's going on for this tool to be extremely effective. But what I saw Matt do in this, it was a very big collaboration moment. Like, it's not everybody sits and listens to Matt, it's a collaboration. There's questions to be answered, people come on. It's a team environment, which I thought was extremely beneficial to brokers out there. And sort of takes a little bit of the pressure off of you having to do everything. There was a lot of engagement this morning in that. And the tools that he's created, the dashboard, the things like that. I mean, you've got to see it. It's a really cool tool to assist you in talking to your clients about penalty situations and the benefits and, like I said, the pitfalls and that people may not understand. I've been in this business. I'm in my 31st year, and I'll tell you,
You join in grade school? Like what they recruited you?
Thank you. But I learned a little bit, of kind of things like that. So I think it's really, really beneficial to that. Having said that, what other benefits are there to brokers and agents connecting with you and that? Because obviously, today couldn't have been a more fitting time. I didn't even really take the rate announcement.
You planned it right?
Into account. Yes, that's right. I planned. I thought, hey, this is a perfect day. So definitely some changes coming down the pipe, and probably in the next couple of days. So it was a good timing. So like I said, what kind of benefits now, as of the 23rd of October, will this help brokers in the next little bit?
Oh, I mean, so talking about the collaboration, it's the brokers, like, we learn together, right? And that's where, even with this too, like when we launch our penalty calculator tool, we're going to have all 280 plus lenders in there, but we're going to have some where we're like, we don't really know a lot about this lender. And if you
Yeah.
want to go down that path, we'll go with you. We're really good at figuring stuff out. And there's certain things where you might figure something out by getting a penalty quote today and then seeing how it changes next week, next month.
Yeah.
Because there's only certain things that they can do to cause that to change. If it's just a little bit less than what it was, then we know that we're dealing with either an interest rate differential that's declining slightly or a 3-month interest.
Yeah.
So the idea is us working together. And what this does is it allows us to have more confidence in the tools that we're providing to brokers, because there's not just one set formula. I think 3 months interest, most brokers understand it. Is it 3 months interest at prime? Is it 3 months interest at contract rate for variable? Is it 3 months interest at contract rate or 3 months interest at posted rate for fixed? It's the interest rate differential. And that's why we just try to simplify things and have it where it all comes down to this. What rates did you borrow the money at? And what rate is the lender telling you that they can get?
Right.
Okay. If we're dealing with posted rates, we have to do a little bit of work to like apply the discount to the current comparable posted rate. We lent you the money at 5%. Oh, we can get 4%. You owe them effectively 1% per year for the remainder of the term. And that interest is dependent on your balance and your path to paying it off. Someone with a 25-year amortization is going to pay more than someone with a 5-year amortization because there's more expected interest. So what it allows us to see is, and we're seeing this a lot with the banks. In fact, there are mortgages, 5-year and 4-year fixed with every single major bank where the penalty is less than it should be. So if we go and look at like a TD Bank,
Yeah.
if you got a TD Bank 6% 5-year fixed from a year ago, the story that TD is saying, and we're not going to look at the rate sheets or their website, the story based on the posted rates and the discounts are, we lent you the money at 6%, we can get 5.7%. That 0.3% difference times the remaining 4 years does not create an IRD that's greater than 3 months interest.
No.
And so because of that, your penalty is 3 months interest. And so you look at this, I'm pretty certain you can get a client a new 3-year in the mid 4s, a new 4-year. Heck, you might even go variable and be able to recoup it. So in this case here, you have it where that IRD is effectively 1/5 of what it should be. They should be saying, we lent you the money at 6%, we get 4.5%. So the fact that they haven't lowered the posted rates means your penalty is less than it should be. If you don't know this or don't know to reach out, you continue to pay a higher interest rate without knowing that the cost to return the mortgage is actually not as prohibitive as you thought it may be. And so there's the benefits there. TD, their payouts are valid for 30 days. You could literally get it payout ordered and get everything done during that time, and then have them on a path to recoup their penalty over the course of 8 to 12 months, shorten their term, reset their IRD risk, get to work with a broker, access some additional equity, maybe lower their payments, consolidate. There's so much value, but you have to know where to dig, right?
Yeah.
So eventually we'll have it with the metal detector, but we're like, hey, dig in this garden here and you're going to find some gold.
Yeah.
And eventually we'll have it where, metal detector points it out. But on the flip side, for new mortgages, if you're getting a client a 3-year, 4-year, 5-year fixed with TD Bank, we're working with posted rates that are higher than they should be. And so that means that discounts are higher. And so what happens is if we see posted rates drop 5 times faster than actual rates, we're going to see the inverse. The IRD is no longer 1/5 of what it should be. It's 5 times what it should be. And so for those clients that want those fixed rate mortgages, we want to identify to them, hey, your penalty is going to go up faster than it should. You're going to see a low rate you want. It doesn't exist.
Right.
You win by finishing the term. And as brokers, regardless of what the clients decide, we describe the products and allow them to pivot when they see value at any point, no matter what initial decision that they made.
Yeah. It really, this tool really helps have that conversation and educate the client to the best of the agent broker's ability. However, I mean, at the end of the day, like earlier in your session, at the end of the day, it's up to the client what they want to do. You're just arming them the best with the best
Oh, and
information
it's just
possible,
about
right?
managing expectations. Like
Uh-huh.
the thing here is if there's clients who think their penalties are bigger than they actually are, there's clients who are going to think their penalties are smaller than they are.
Hmm.
And they're not going to know until they ask. And if they ask, the lender's going to tell them the bare bones information. Your penalty's this. Your IRD could be just below 3 months interest. They don't tell you what it is.
You're right.
You could ask them what has to happen for my penalty to be 10 grand. They cannot communicate that to you,
Right.
even though they have the formula. And so part of the resources that we're looking to build is at any point for brokers or clients, hey, here's what the lender has to do for your penalty to be more than the minimum. If it closes 5-year fixed with TD, they have to lower the 5-year posted by, let's say, 0.3%. The
Exactly.
last time it was there, I was on this date here. Here's what the world looked like. We believe that could happen the day after closing.
Right.
Okay. If it's, say, a First National monoline, for them to do the same, they'd have to lower their 5-year rate by 0.3%. For that to happen, bonds would probably have to drop around 0.3%. The last time bonds were 0.3% lower were here. The likelihood of that happening is so much less with First National than TD, which is why First National rates are higher than the TD rates. And so
Right.
just understanding, like the analogy I'll use is I could save anyone money on car insurance as long as they're willing to increase their deductible.
Right.
Right.
Yeah.
And you think about it. If you're a safe mortgage driver and you finish your term, you don't have to worry about the penalties. Right. And who cares if you have a $10,000 deductible? Who cares if you don't have comprehensive on your car? You're not going to get an accident. And if you do, it's going to be their fault and they're going to fix your car.
Right.
But if you're a bit worried, or maybe you want to, get into a different car. I mean, sometimes it's a blessing if their car gets written off because they can get something else. But at the end of the day, then that's where you opt for something that gives you that easier path, that $500 deductible versus the 10,000.
Yeah.
And so just explaining this to clients so that they're aware of, like, are you self-insuring, in which you need to finish the majority of the term,
Yeah.
or are you buying insurance, buying protection? And then the nice thing here too is sometimes with certain lenders, there's situations where the penalty is far less than it should be
Right.
by design,
Yeah.
in which at that point there, you get an opportunity to potentially save more money and recoup whatever premiums that you paid for that protection.
Yeah. Oh, exactly. Exactly. So you mentioned getting ready to launch. How do brokers become part of your mentor program, your team at the Prepayment Penalty?
Oh, so you go to the website. So we'll have it. It'll be in the YouTube here. So www.penaltymentor.ca. So right now, so we're preparing for MPC. We have a penalty box. You'll see myself and Adam there. You're not going to, you won't miss us because we'll be wearing referee uniforms.
Nice.
Because we see our kind of self as like penalty referees. Like, what are the
Yeah.
rules, right? You think about it for hockey. Who understands the rules better than anyone else? Not the coaches, not the players, the referees, right?
Right.
So come to the website. So right now we have a wait list for a penalty calculator.
Okay.
The thing here with this is it gets better because of the brokers and the input,
Right.
and us figuring things out, stumbling a little bit. We're going to be right big. We're going to be wrong small. There's going to be lenders we have more confidence with. Other ones we're like, hey, here's what we're dealing with.
Yeah.
But at least it can help you to get closer to where you want to be. And then other ones we have no clue, in which maybe need to introduce us to a BDM, or we can get some information. At the end of the day here, we're going to see transparency is going to be such a big thing, in which there are going to be lenders. Doesn't matter what great rate you're offering. If you can't explain what it is on the back end, why risk it? Right? Why risk it when you know First National, Scotia, TD, or these other lenders better, and you know how you can pivot? So right now, for those who want to join, and so we have a promotion with MPC, the conference, and we'll definitely, provided it doesn't take you forever to edit this video, we're going to make sure that you can get in on this. So basically, getting 4 months access to the calculator. So we're starting to onboard. Yeah. And then you'll have priority access, and your clock for that starts the moment we onboard you. But getting the coaching and the training and the support and like the dashboard and what you saw in our training today, getting that today, right? Because at the end of the day, I don't need to give you a metal detector to tell you that there's gold in your garden. No, and I mean, right now, right now, based on October 23rd, 2024, at TD Bank, there are no IRDs greater than 3 months interest. Why? Right. Because I've scanned everything. I just don't, I don't find any. And that means that the rate is high enough, there's a long enough remaining term, that's savings to your client. And worst case, you're just letting them know where they're at, because maybe they want to sell in a month or two. Maybe
Right.
there's something you can do today to save the money that doesn't put money in your pocket, but gets a great review, gets a recommendation, a referral, because you're doing something. Whereas when they reach out to TD Bank, TD Bank's just like, your penalty's 3 months interest, but not telling them where their IRD is and not
Exactly.
telling them what has to happen for it to be 7,000, 10,000, 15,000. If
Exactly.
they're 2 months away from selling, the math might make sense. Pay the penalty and sit on it open. So you can get access. We do one-on-one training sessions, smaller groups. We do our 3 training sessions per week. You have the resources. You look at, I'll tell you generically where to go and dig, but if you
Yeah.
have it and you have whatever deals you want to go through, then that's where we can fine tune it. And you have to do a bit of the work yourself,
Oh, of
but
course.
we'll have it where we're like, hey, here's where we're at. We can go that Scotia Instant Funding program because we have the runway to do it. Or we don't have runway, the client needs to know it's lawyer and payout being ordered, or pay the penalty and sit on open. And I look at this, there are thousands of mortgages that are being submitted today that have no chance of funding, because by the time the payouts are ordered, the penalty will be so big that it just doesn't make sense.
Right.
And if it's not really big, it might be the broker has to throw the majority of their commission at the client to make the math work. Whereas for here, if you have a long enough runway, you can take advantage of that and you can go the cheapest, slowest route. If you don't, and the payout's valid for long enough, you get that payout ordered and you just pay for that, that privilege.
And I think that's key, Matt. Sorry to cut you off. I think
No
that's key there is brokers and agents understanding that balance number, that figure, that payout request. Sorry, that's what I was thinking.
No.
Knowing that window, that runway, you're calling it, right? That longer runway, that as long as you lock that in now and you request, you now have that runway to work with to get that deal without having a consequence of a rate change affecting what that number is at the end of that.
Oh, absolutely. And that's where for here, like we track the lender's posted rate history.
Exactly. Yeah.
We know, like, is the next posted rate cut going to be 0.1, 0.2? What have they been doing? And so that's where, if I say have a client that's leaving Scotia and we're using FCT or a lawyer or whatever, I'm reverse engineering, like, how far are we away from having that payout, right? Or we're a week away. We have 0.2% of room. I'm pretty confident we're not going to get more than a 0.2% drop before we have that payout. Exactly. So in that case there, we can go the route of whether it's FCT or a lawyer, we're going to have the payout, and then we're going to get this done.
Yeah.
If we're close, then we're like, hey, client, we think the next cut's going to be 0.2%. We might not have the payout. The cost of that drop is $2,000, $3,000, whatever it ends up being. Our only option right now to secure this, because we can't speed things up, is to pay the penalty, go into an open, and that's where it's buying insurance. And so as long as I know there's a path for the client, I'll go and take some of my commission that's, not burning a hole in my pocket yet, and go and deploy that there to get the client to go and do what it is we need them to do in order to maximize their savings.
Exactly.
And if they don't do it, the moment we see that posted rate cut that causes the penalty go up, we inform them, because we don't want to have it. There's bad news. We don't want the lender telling them. We don't want FCT telling them or the lawyer.
Yeah.
We go and tell them. In fact, we tell them even before anyone else could tell them, because we're in complete control of knowing what these changes mean when it comes to their bottom line.
Exactly. And that goes back to a comment you made earlier, setting an expectation, advising the client, listen, here, this is our runway.
Yeah.
These are the ramifications. If you don't follow what I'm telling you and getting me what I need to assist you, this is the ramification past this date.
Well, absolutely. And the runway stuff is good too, because there might be some information you need, like with TD Bank, the discount set based on when the rate is set.
Yeah.
So that's where you'd be like, hey, we think it's this. We're going to rush for this. We might have to pay for this. But if you can confirm this, we might have a longer runway. And if you have a situation where the client is like, we're ordering a payout, the lawyer is $1,600, I'm going to cover $800.
Yeah.
But if you knew you had a longer runway, you could go with a cheaper option. Then it's important that we know that, because maybe that mortgage, the rate was set before TD raised their posted rates in fall of 2023. And maybe we actually have a longer runway than what we thought we had. If we have a longer runway, then we have more time to make the decision. more time to make the decision, we can go a path that's cheaper. We can
Right.
use a title insurer and have the legal fees be half the cost versus versus $1,600. So just
Yeah.
you want to make sure, and that's why with the stuff here, since brokers don't know where the IRD is, whether it's here right below 3 months interest, zero or negative, if you rush when you don't need to, the client is losing out on value.
Yeah.
If you don't rush when you should be rushing, the client's missing out on value. And those are things that we need to be paying attention to. And that's where it shows that we're the expert. And clients will very quickly see that the product that they're getting from the bank directly, or even from other brokers that don't have this training, is inferior, and that we can command not having to match or beat the rate because we have a level of expertise that's not anywhere else.
Yeah, exactly. Well, I think I think you've provided quite enough or valuable information. Never enough. Never stop learning. And I think that it gives a nugget to those brokers and agents across the country that we lend in. Valuable information. And I truly encourage anybody that's interested and wants to learn more about this, hit them up. I think you're going to find value. It's going to be a great tool in your war chest to help your clients navigate this ever-changing market. This will be posted after we hit MPC. So I really look forward to seeing you out there this weekend, Matt. And me and Adam, we'll sure to edit this, get that information in the video. So everybody knows how to connect with you. Again, thanks for joining me. It was a pleasure meeting you a few weeks ago.
Thank you so much for
Look
having me.
forward
Really
to
appreciate it.
growing this relationship there, bud. Appreciate it.
Definitely. Take care and reach out if you have any questions. www.penaltymentor.ca or matt@penaltymentor.ca.
Awesome. Thanks, everybody. Thanks for your time. As always, stay tuned for that next video out there from 3 Point.